Hello everyone. We'll be discussing the Prelims 2025 economy questions in this discussion. So let's look at the questions one by one. The first question, with reference to investments. Consider the following. The options given are bonds, stocks, hedge funds, and venture capital. See, the question is about how many of them are treated as alternative investment funds. Alternative investment funds are those which are different from the usual market driven asset classes. This is meant for high net worth individuals who want better returns that is different from the market. Among the given options, if you take a look at the bonds and the stocks, both of these are something that even retail investors can participate in. It's a open market asset class. If you remove them, you will only have two options. So therefore, answer is only two. Next up, take a look at this question. So today is 25th May. Today's Sunday Hindu FAQ section also talked about the surplus, RBI surplus transfer. And in that, we discussed about the balance sheet of RBI. If you understand the balance sheet of RBI and the economic capital framework, the Bimal Jalan committee, this whole concept is linked to that. Previous year question, there was a question, section 7 of RBI Act. So the whole controversy is nothing new. It's been in news for like 5-6 years now, almost even more than that. So that is the inspiration for this question. Now, which of the following are the sources of income for Reserve Bank of India? If you take a look at the third and fourth option, pension fund management and lending to private companies. See, RBI is a lender of last resort. It is not something like a normal bank which will give loans to private companies. That is not its role. It's a regulatory authority which is meant to control inflation, monetary supply, that is money supply in the economy, and ensure fiscal stability, overall monetary and fiscal stability, along with the government of India. Now, pension fund. If RBI is dealing with pension funds, what is the PFRDA doing? Pension Fund Regulatory Development Authority. And if you are lending to private companies, as in RBI is lending to private companies, what will the normal banks do? Right. So if you eliminate both of those, you will be left with 1, 2, and 4. Okay. The rest of the options are something that can be worked out through this logic. Now, fourth one, printing and distributing currency notes. See, as such, printing notes is a expenditure for RBI, but because it will derive some value out of it, there is a concept called seigniorage. I want you to read about this. You will understand this concept. So 1, 2, and 5, sorry, is the answer. Now, in this question, with respect to the government of India, consider the following. So this is a new kind of question, 3-column question. Last time there was match the following question, but they combined pair questions with this 3-column question, which is a new addition in this prelims examination. If you take a look at this, Enforcement Directorate is not under Ministry of Home Affairs. It is under Ministry of Finance only. Okay, so this is wrong. This is right. Answer is only 2. Now, coming to this next question. Consider the following statements. The Reserve Bank of India mandates all listed companies to submit a business responsibility and sustainability report. See, listed companies, what does RBI have anything to do with listed companies? It's the SEBI's role, right? If RBI is doing market regulation function, then what is the role of SEBI? This is the classic case of how UPSC will twist the statements. The first one is wrong, and the second one, the name itself says business responsibility and sustainability report, which indicates that it has got less to do with the financial metrics, which you will anyway have through minutes of the meeting of annual directors meeting, the reports which are published for market to assess if the company is performing well or not. All those will be there as a part of the disclosure. Okay, look at the second statement. In India, a company submitting a BRSR makes disclosure in the report that are largely non-financial in nature, which is true. because financial metrics are usually covered in normal annual reports, according to which the company's performance is assessed. This is a new kind of a report which is meant for the intangible impact that a corporate business can have on the society. Whether it can be through ESG norms or corporate social responsibility, all those metrics will be added here. Next up, let's take a look at the next question. In India, income from allied agricultural activities like poultry, farming, wool rearing are exempted from all the taxes. That's statement number 1. Let's look at the statement 2. In India, rural agricultural land is not considered a capital asset under the provisions of IT Act 1961. See, the definition of what is considered a capital asset is actually given in the section 2 clause 14 of the IT Act. Now you must be wondering, how am I supposed to know all the provisions of the IT Act, because this is not an exam for CA. But the fact that agricultural income is non-taxable, awareness of this fact, which is a big loophole in this country. It's criticized by a lot of economists that this is a very big loophole in this country, because even during demonetization and the debates that followed as to how we have to tax our nation, this was one point of discussion. In that, you will know agricultural land, which is considered essential for sustaining livelihood through agriculture as a profession, it is not considered like a capital, and therefore it is not taxed at all. Agricultural income is not taxed. So what is agricultural income? What you do with ploughing, tilling, production of crops, till that part it is non-taxable, but allied activities are taxed. So what is the answer? Statement 1 is not correct, but statement 2 is correct. Is not considered a capital. Yes. Okay. Now, take a look at the 6th question. India has joined the Mineral Security Partnership as a member. Yes, it's a current affairs news. India is resource-rich country in all the 30 critical minerals. See, the whole debate about energy transition or moving away from fossil fuels to e-vehicles. There are a lot of comments by experts that we are moving away from fossil fuels imports and now we are moving towards another resource where we don't have the raw materials required to master that area also. That is e-vehicles or alternative fuel resources, battery vehicles, etc. One of the major complaint is that we don't have the critical minerals required for becoming masters in that new technology also. We are still dependent on China. We are still dependent on South American nations. You have something called the lithium triangle from where we take lithium. So, this statement cannot be right. If you know that, eliminate all those with second statement and you will arrive at the answer. So, that is why we say, whenever you are reading newspapers, if you understand the context of the news, like it is a problem that is meant to be solved, you will be able to solve these questions. Next up, okay, let's take a look at this question. As regards returns from an investment in a company, bondholders are considered to be relatively at lower risk than stockholders. Bondholders are lenders, whereas stockholders are owners. For repayment purpose, bondholders are prioritized, stockholders are considered later. This is the question. So we need to understand if this is correct or not. If you know the basics of financial markets, you will be able to crack this question. See, firstly, what is the concept behind this? You need to understand the concept of risk. When you are investing your money, are you looking for an ownership in a company or you are looking for a return on investment? That risk appetite with respect to ROI, that will decide whether you will become a bondholder or a investor, or let's say stakeholder. Stakeholder as in shareholder. Okay. So if the company is performing well, since you are taking more risk, obviously you will be getting more return. If the company is not performing well, you will be at loss. So you will be taking that hit. But look at bond holders. What is a bond? It's like a fixed income instrument. Let's say you, for a company, you give 100 rupees, and for this 100 rupees, you are expecting an annual return of 8%. No matter what happens, you are expecting that return. In the worst case scenario, if the company is failing, these people will be bailed out first because they were not willing to take any risk. So this 100 rupees at least is guaranteed. Forget about this interest, but the capital is at least guaranteed. But that's not the case for shareholders. Therefore, with this concept, we can say the answer is A. Now, let's take a look at the next question. See, recently there was a very big, news. Thanks to the COVID phenomenon, everybody started getting access to financial knowledge, or at least they were able to realize that financial markets is a instrument for earning money. In that, one of the segment is F&O, futures and options. And since a lot of people thought that there is huge return on this, everybody started getting into the markets, which became a cause of concern. That whole point was debated time and again by the finance minister, many stock market enthusiasts. Ever since 2020, there was a significant rise in the number of demat accounts in our country as well. So much so that India went on to become the largest, the large NSE. NSE became the platform with the highest number of option traders, and that has been flagged by many people. In fact, you would be surprised to know that 99% of the traders ended up losing their money, according to the reports from SEBI. This was a major point of debate. At one point, the craze was so high in the financial markets that we even overtook Hong Kong. So this statement is also right. So there is no regulatory body either to warn the small investors about the risks of option trading or to act on unregistered financial advisors in this regard. So this statement is false. Okay, this is a mistake. This statement is false because we have SEBI. SEBI came up with regulations on F&O recently. Even financial influencers, like finfluencers they're called, they are also regulated. So 1 and 2 is the answer. By mistake, it was marked as 1, 2, 3. It is 1 and 2. Consider the following statements. Circular economy reduces the emissions of greenhouse gases. That's true. Circular economy reduces the use of raw materials as inputs. You have this triple R, reduce, reuse and recycle. SDG, responsible consumption, 11. Okay, responsible consumption. Circular economy reduces wastage in the production process. Of course. So, the answer is A. Okay, next up. Capital receipts create a liability or cause a reduction in the assets of the government. This is the very definition of what a capital asset is. So, what is a capital receipt? Let's say you have gold. This gold is worth 10k or 10,000 rupees. Okay, this is like a capital because it is something that you already have. Now, capital receipt is either going to create a liability. If you are borrowing for some long-term investment, if you are borrowing to create an asset, that can be a liability. But if it is reduction in assets, you are selling away your gold and you are getting money from the pawnbroker, that is also a capital receipt. So the first statement is correct. Borrowings and disinvestment are capital receipt. See, just like disinvestment means, just like your gold, government will also have PSUs. They decide to sell that PSU away. For example, Air India. Air India was previously owned by the government of our country. It was later sold to Tatas. That is a disinvestment. So this is also correct. Interest received on loans creates a liability of the government. See, when you're giving a loan and you're getting interest, how will that be a liability? So this statement is false. So answer is 1 and 2. You can club this under economic geography. Production of crude oil, refining, storage and distribution of petroleum, marketing and sale of petroleum products, and production of natural gas. See, this is a question on Petroleum and Natural Gas Regulatory Board. This is there directly in your previous year questions. That's why previous year questions are extremely important. Once you see a theme in previous year questions, it can be re-asked like this. That's the reason I had been advocating that we should continuously prepare for this previous year questions. Now, this is by the Ministry of Petroleum and Natural Gas, and if you remove that, you will have an answer only 3. Okay. Now, this 61st question is basic definition of primary deficit, fiscal deficit, etc. Deficit means there is a gap. Fiscal deficit means whatever money you earn and what the difference between whatever you earn and whatever you spend. If there is a difference, you have to borrow, right? That is the basic definition of fiscal deficit. Then you have to know primary deficit. If you remove the interest borrowings part, that will become the primary deficit. And if you do the calculation, you will realize that all the 3 are right. Yeah. Now, this question, fiscal deficit, again another question on fiscal deficit, basic definitions. But the caveat here is they gave you an additional distractor, 10,000 crores through non-debt creating capital receipt. See, when you're talking about fiscal deficit, what did I say is the definition? Whatever total expenditure minus total revenue minus total expenditure. Okay. And we are talking about primary deficit. Primary deficit means fiscal deficit minus interest payments. So you will have the answer for 48,500 crores. Now you might be wondering, why did they give this 10,000 crores? It's a distractor. This 10,000 crores is already a part of the 50,000 crores that you have as a part of the fiscal deficit. It just gives a clarity so that there are no other assumptions made and you can clearly mark the answer. Okay, this question again, straightforward question. We know that 41% is the devolution from the union to the states. If you remove that option, you will directly arrive at the answer. A straightforward question that can be solved through elimination alone. This question, World Bank has various wings. IBRD is one such. And look at the second, single-handedly. Usually, UPSC has a technique of making questions or statements within the questions illogical by making them extreme. This is one such example. If you remove this, it works single-handedly to help the developing countries to reduce poverty. That's too much of a claim to make. Remove that, you will be left with 1 and 3 only. Again, basics of RTGS and NEFT. Real time. The name itself says real time. Okay. In RTGS, the settlement time is instantaneous, while in case of NEFT, it takes some time. That is the whole point. Both of them are meant for money transfer, but the basic difference is here. In RTGS, the customer is charged for inward transactions. Why will they charge for money coming into our bank? Okay. While that is not the case for NEFT. No. Operating hours for RTGS are restricted on certain days, while this is not the case for NEFT. Okay. So, the answer is 1 only. Okay. UPI. How many? See, internationalization of UPI. That is one major trend that we are witnessing. So, Bangladesh and Germany, these are the two countries. The negotiations must be going on, but they are not confirmed yet. So, only 3 is the answer. Now, this is an interesting point. PM Surya Ghar Muft Bijli Yojana. Usually, UPSC does not expect us to remember numbers, but this time we were kind of challenged because we are expected to remember the exact number of jobs it creates. You cross verify and you would notice that 1, 2, 3 is the answer. I believe that a lot of candidates might, use the usual patterns of UPSC that we are not expected to remember numbers, but that's okay. If you get it right, well and good. But if you don't get it right, that's okay, because we go by historical trends. We can't sit down and memorize each and every number that is given by UPSC, right? So that's fine. So I think that's about it when it comes to economy. Okay, you can even consider this to be a part of infrastructure economy. Indian Railways prepared a national rail plan to create future-ready railway system by 2028. So this is 2030. Kavach is automatic train protection, which is developed in collaboration with Germany. This is false because this is completely indigenous, and that is the reason it was in use. If you can eliminate this, okay, the question is not correct. Please be careful. So you cannot eliminate, okay, not correct, right? So this is definitely not correct. So you can eliminate this. Third statement is correct. RFID is there in that. So you cannot include anything that has third option. So the answer is 1 and 2 only. You have this Vivek Debroy committee on National Rail Plan. You will have to read current affairs not like factual information, but by looking at them as a problem statement. The problem statement here is that there are a lot of railway accidents happening, and in that context, there were many articles in the Indian Express and the Hindu regarding Kavach and the Vivek Debroy committee, the National Rail Plan, etc. So that's the reason it was asked. Okay, so that brings us to the end of discussion on economy.